Hey guys, it's Simon with Trade and Perform Coaching, helping traders move from being boom bust traders or losing traders to consistently profitable traders, using both a process, structure, and well-defined charts to help them do that. This is a relatively quick review. I kind of want to give an idea of specifically focusing in on the zones and how to use the zones and how they could have resulted in P&L, both in the European session and in the US session. Let's kind of jump right in. And before we do that, I just have to throw up the quick disclaimer. Basically, what this says is, let's pull this over here, is that this is for educational purposes only. It's not a recommendation or buy or sell any particular financial instrument. Futures, is which I talk about here primarily, has large potential rewards, but also large potential risks. Be aware of the risks, be willing to accept them. Don't trade with money you can't afford to lose. Past performance is not indicative of future results. And please consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. So a lot of times I think what misses in these videos is part of my passion is helping traders learn, right? What is it that trips them up? How is it that they can find great trade location on the charts? And then how is it that they can mentally manage their trades? So there's two aspects to that. So the mental part of the game and the trade plan and all the nuance requires longer videos. This is just going to focus on the zones and how well they work. So let's jump into ES to begin with. So on the charts, you'll notice that there's all kinds of lines and points and notes. What really matters and what we're really zeroed in on are the white zones. Okay. So today's key location, there was two key locations. One's way up here at 24.42 to 44. We had no opportunity to get up there. The next one was this 24.27 to 24.30. We didn't have enough energy to make it, which is normal, right? We were up 14 points. The normal day range is 10 to 15. So we didn't quite expect to make it up there. But here's the important part. If you look from the open, even though buyers were in control and we gapped up, look at the rejection. I'm going to draw this out right here. Look at the rejection right at the top of the zone. Now, some people in the room, myself included, kind of chose not to trade the first hour because it was non-farm payrolls and sometimes it can be very volatile. Some people chose to trade the first hour and they nailed those shorts right out of the gate. And you can see 24.17 gave you a rotation from 24.17.15 right down to 24.12.50. That's a 5-point rotation, guys. It's $250 a contract. It's a great deal. It covers the cost of the charts in the room each month. It's $95 a month. And that one trade, assuming you entered properly, you scaled along the way, you had the potential to get up to $250 a contract. That's just the math on it, right? And the goal is to take the first entry, not the second entry necessarily, unless you're a more advanced trader. But even on that second trade, again, 24.17.50 right down to 24.14. That was another 3 points that was potentially available. Now this was interesting. First test, second test, third test. Realize each time it tests that location gets weaker and weaker and weaker, right? So finally we drove through the zone, right? And then you'll see that we consolidated, got above the zone and consolidated above it, right? And so you really never want it to spend more than a couple of seconds, maybe wick outside of the zone if the zone's going to hold, right? Again, this was the third test, and you can see once we were above, the natural place to shoot for target-wise would have been up to this 24.27 to 24.30 area, and I imagine that's what we're going to tag probably Sunday evening. Banking stocks are incredibly strong, and that should have a positive effect on ES. Let's go jump over to NQ really quick. Again, same focus, same idea. Here's the NQ chart. Again, this is the white zone. So notice that on today's chart, there's two key white zones, right? And they're not all white. Some of them are green, meaning they're not quite as strong, or they're different colors, but the white ones are the ones that we are focused on for taking trades, particularly on the first touch. So you notice we push up out of 56.18. We opened right above 56.18, and the low of the day, you'll notice it had it to the tick. I want to show you this in the dome. All right, low of the day, if I can pull this all the way down. Let me see if I can grab this here real quick. Maybe I can't. And if we look down, below the day, this is the trading dome, 56.18 and a quarter. Top of the zone was 56.18. I didn't mean to put the 07 there, so just off by a tick, right out of the gap, above a key location. Buyers are in control. What we would have liked is actually a push into this key location for a rotation up. Now notice, we rotate from 56.18 right to 56.45 to the tick, right? One tick past, and then it rotates. This is what I'm talking about here. We rotate from 56.45 down to 56.32, which was Thursday's high, right? So that move is 12 points. If you do the math, it's $20 a point. One contract on that rotation is worth $240 per contract. Again, you'll notice the same pattern. Second touch gave a smaller rotation, then finally the third touch we pushed through, and then the top of the white zone after we broke above, as we pull through the course of the day, you can see the white zone provided support all afternoon long. It even gave one little trade as you pushed back in here for a rotation back up. But again, waiting for the key area for the white zone really gives you just a huge edge in making your decision as to where you want to take your trade and helping you make money in the market. And that's a big key outside of psychological problems or management problems or process problems that you might have. That's a big key to getting profitable, right? And then lastly, let's jump over to CL and NQ. And what you'll notice today, CL and the 30-year note. So first let's do the 30-year bond. This is pit open, 7 a.m. right here, 7:20. Okay, we obviously had economic data, and you'll notice right on that economic data. So first, we opened in the zone, right? Rejected out of it, pushed all the way down, and then you'll notice this is London open, and about 2 hours into London open, we come into backside test. This is what I'm talking about. So during the London session, we backside test this area, reject back down, and if you look at again the number of ticks this is worth, this was Thursday's low. We roll from 152 and 8/30 seconds all the way down to 151 and 27/30 seconds. That's 8, 4, 12 ticks. 12 times 33. Math isn't my, I'm a good trader, but I'm a horrible mathematician, so I know that's at least 330. That's about $400 a contract on this move. And then you get another chance at it right here on the second push up. Again, first time in that session into that location. Again, it gave even a larger move, well worth more than $400 a contract on this move. And then if you'll look, I think that was the last touch that we had of the day. And I'm not saying that everybody who took these locations made that much money. I want to be clear, right? Obviously, it depends on where you took profits and what your process is for scaling your trade. However, that profit was available, right? And again, this is a visual reference point, not a zone. The key is to focus on the white zones for the entry. And then lastly, let's look at CL. And if you look again, going to the 24-hour chart, this is early Asia. We pushed right down into 44.93, 44.73. We bounced out. We really consolidated on top of the zone, came into London. London pushed down. Again, this would be considered multiple tests of this zone by this point. We pushed through. Now notice, we pushed through, and then right at about 5:45 in the morning, pushed right into the zone. This is 44.16 to 44. First touch in. Again, remember, these are published every evening, usually between 6 and 10 p.m., right? Come right in, pop in, and then rotate all the way back to 44.73. So again, I want to give a value of this contract so people understand. This is a pushing from 44.16 back to 44.73. That's roughly 57 points, 57 ticks, right? At $10 a tick, $570 a contract. And then you'll see first touch from underneath, right? So follow how it rolled. Roll right back in, first touch from underneath, and then we rolled all the way back in. It doesn't always work this beautifully, but it did today. Again, now here's where it gets a little bit tricky. We already tested here the first time, and we also, so this is the first time from underneath, right? But this zone was the second time, I want to point something out. This zone was the second time in a 24-hour session, right? We tested London. This was the second test into London. So notice that when we came right to the top of that 44.16 and we rotated up, that rotation up was only about, I believe it was about 15 ticks. It was back to 33, right? So there was a profit to be had off the top of that, but I will tell you, I would almost never have a stop that would have allowed me to push as far back as this would have come in. And had I taken this trade, or had I not scaled out of this trade in an attempt to push back up, I would have definitely been stopped. But again, this is the second time into that zone. And then you can notice subsequently the third and fourth test both provided great trade location each time. So the idea is to stretch first time into the zone from the stretch and to be able to capture that and get paid. And I think you can see how that was accomplished on all four markets. So anyways, my name is Simon. I'm with Trade and Perform Coaching. My job, or my passion, my job is to trade. My passion is to help other traders move from being boom bust traders or losing traders to consistently profitable traders. And I think I charge a relatively reasonable price for that, $95 a month for the mentoring room that I run all day. And then I also do one-on-one coaching, but I'm pretty much solidly booked up there. So if you're interested and you'd like to come visit us for 5 days, email me for a free 5-day pass to tradeandperform@gmail.com. I will need your Twitter name so that I can follow you, and then you can request a follow back from the private Twitter stream. And you can see how the charts come out the evening before. And then also a lot of the mentoring we do in the room is very valuable. I get great feedback from it. Anyways, I hope everyone had a great week. I hope everyone got paid. With good location, you had a good week this week. With bad location, you got whipsawed. So anyways, have a great weekend, guys, and thank y'all for taking the time to listen. Have a good night.